Energy is leading the market again today after being one of the worst performers last year. The Mag 7 is also under pressure once again. So are we looking potentially at the new playbook for 2025, or will we go back to the same old, same old? Let's ask Liz Ann Sonders. She's the chief investment strategist at Charles Schwab. Liz Ann, it's great to have you here today. Really appreciate it. And what do you make of this new playbook thus far?
Well, I think it's thus far. We're 2 weeks into the year. One of our theses coming into 2025 is that we were likely to see, particularly a continuation as it relates to the second half of last year, these at times sharp sector rotations, not from one area like the Mag 7 to another area like energy in perpetuity over the course of the year, but on an ongoing basis. At times back into the prior leaders like the Magnificent Seven. We certainly saw that sporadically in the latter part of this year. And I think it's driven by the broad combination of uncertainties from a policy perspective. You've been spending a lot of time in the last 10 minutes or so talking about government policy uncertainty. We've got monetary policy uncertainty, and that moves the needle in terms of cyclical sectors versus more defensive sectors, but also large caps versus small caps because of a different relationship with something like the 10-year yield. So I think that's what we're likely to continue to see is these sharp sector rotations. Today, it's in favor of energy.
Interesting, because you also are overweight on financials, are you not, as we start to hear from some of the biggies this week. But what underpins that and how, I mean, not how long, maybe it lasts all year, you know, if you think they're really going to outperform here?
Well, we had the uninversion of the yield curve, and we assume it'll continue to normalize. That's to the benefit of the financials. The earnings profile looks good. Valuations are somewhat reasonable. So that's big picture backdrop for financials. We do have one other outperform rated sector, and that's communication services. And in that case, you've got a pretty sharp earnings improvement. In fact, if you look at all 11 sectors, just in terms of fourth quarter expectations, and you go back to the early October period, only communication services has seen kind of an upgrade in consensus estimates for the fourth quarter, and that carries into 2025. So you still have that, denominator leverage, even though you don't have a valuation story in a sector like communication services. You at least have that earnings doing more of the heavy lifting story.
Communication services always makes my head hurt. I mean, how much of the is this Amazon? Who else is in there? I always struggle to keep track.
Meta is I think it's the biggest within communication services.
So it's kind of a Mag 7.
It is one of the Mag 7, but Amazon is actually in consumer discretionary. So among the 7, you incorporate, a lot of people don't realize this. They think they're the tech stocks, but it incorporates what we call the growth trio, technology, communication services, and consumer discretionary. So understanding what sector they live in, especially given that they're so dominant within those sectors, is really important when you're trying to make a sector call. The one thing I would say, though, going back to sector recommendations, as you know, Kelly, we have been a bit more focused on factor-based research and stock selection. So picking stocks, deciding on what characteristics, another word for factors, that's where there has been more performance consistency amid these sharper sector rotations. So strength of balance sheet, high interest coverage, positive earnings revisions, and that analysis and screening can be applied across the spectrum of sectors. I think that monolithic sector overweight, underweight is a trickier thing to try to do amid these sharp sector rotations.
For sure, and I think it makes perfect sense in an era of high interest rates. There's just going to be some companies that can handle it better than others. Real quickly, not to kind of go back on that point, but consumer discretionary, from what I can tell, is the only place you're underweight right now. And why is that?
We do think that we're likely to see a little bit of pressure on the consumer, particularly from a rate backdrop. So we've had incredibly strong consumer spending, strong retail sales. It's not our base case that we're going to see a weakening in the labor market. It's our base case that it's probably going to hang in there. But I think any faltering in the labor market could probably change very quickly the trajectory for consumption, because I think that's been the primary pillar of support.